Greetings, Dr. Jeffrey Scott, and this is my weekend market update for Market MRI Pro for November 24th, 2024. I title this Markets Melt Up. Will we end with the bull trap? And my address is marketmripro@gmail.com. Please note I've been doing YouTube videos for over 20 years for the market. I've started a separate channel for Market MRI Pro, and one of the key pieces of this is I demonstrate how fast, with a dedicated tool, I can go through a top-down or bottoms-up analysis, of the markets. This application you'll learn more about is not yet out. It's a new tool in beta testing that we call Market MRI Pro. This is for educational purposes only. I have no licenses that would give me permission to advise you. I have an MD, so I can advise you in medical issues, but not on buying stocks. So take anything I talk about in the spirit of education, not investment advice. The intent of the video is to demonstrate various tools of top-down analysis. Trading involves risk, and you are solely responsible for any investment decisions you make. I may own or intend to sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should consult with your financial advisors before making trades. As always, I invite you to join my Google group. It's called Top Down Trader. You'll get notification when I put out videos. You'll get special offers on tools that I may come to market with or on live events. And I'll do from time to time webinars for the Google group members. Hope you join, and you'll hear a little bit today about my leaders list. And actually, let me just talk about that right now. So I'm going to show a different, the leaders list is something that my mentor Ian Woodward came up with years ago. And the purpose of a leaders list was to build a list of the best stocks in the market so that if the market was to roll over, you would expect the stocks that are the major leaders in the market at that time to lead the decline. So we have put together a leaders list. This is actually an HDSI chart because it allows me to produce the synthetic list. These are the stocks. By definition, each stock is supposed to look something like this. This is an average of all of them. You know, a big run up, typically at least 50% move in the last 6 months. No more than 2 stocks per industry group, and they all should be at their recent highs. So I put together this list, and I will be posting it every night in my top-down group to see if we can get an early warning that it's time to get out of the market. And in times like this, I think it's an important thing to know. So let's start with, who do I want to start with? Let's start with my timing model. So I have a timing model that I've been using for a long time. And this timing model looks at just 2 things, price, and that is a weekly in this case. I look at a 30-period WMA and my Bongo, which is a trending indicator. The first time I break above the WMA and the first day that I'm above and my Bongo has turned to blue, I will trigger a buy signal. I will stay in that buy signal until price closes below the WMA on the same bar as the Bongo has turned to red. A move below the WMA by itself, not enough, and it's the close of the bar that matters. A Bongo that's red, not enough by itself. And you could see that this signal keeps me in the market for very long periods of time. And that's the goal, not to be whipsawed. On the weekly charts, each of these, the spiders, the Qs, the diamonds, and the Russell, as you can look at their buy-sell signal on the bottom, are in multi-week buys. Why is that important? Why should you care? Well, I have been using this system for 20 years, and I've been through several major market moves to the downside, and in each of those, it kept me out of the market during the downtrend. Remember, you have to be once you went below the WMA with a red Bongo, you went to a sell signal, and you stay there until you close above and the Bongo flips. So the combination of those two make a lot of these moves not get you flip your direction in the market. So you stayed out of the market on the downside. You shortly after it turned up, you got in. 08, 09, same thing. 18, 19, short downtrend, and you got back in. And 2020, gosh, just a very short period that you were out, and then you rode the market higher. So this is a time-tested system. I then will base my conviction not on just the weekly, but the daily. The daily one is actually doing okay right now. As you can see that when it flips, it takes a second to do that. You can see that only the Qs remain in a sell signal on the daily. But with price above the WMA, I take that as a caution, not an out and out, be careful. So I am getting nervous when you see big moves away from the WMA. They're getting to the points where you usually see a correction. The other thing is this green line represents the 13-week new high, new low, and it's getting up to the higher parts of the chart on everything but the Qs. And often that will trigger some type of a correction as well. I have a thing called the market briefing that I look at. We'll start with the performance view. For Friday, I can see that IWM was up 1.81 to lead the market. All the major ETFs that I follow were up. The volatility was down. Over 5 days, you could see their great performance, especially the Russell up 4.5. Here it tells me on Friday they all finished in the upper part of the range, which was extremely bullish. All new highs and greater than new lows at the different time frames. On the 1 day change, discretionary, industrial, and financials led the way. You could see over 5 days that it was a little different. The big winner was materials. We got energy, and we've got utilities. So there's been some rotation, but we went back to where we were for Friday. I also have 47 different themes. I'll be continuing to add to those. It tells me that the strength on Friday were blockchain, retail, genomics, clean tech, biotech. Interesting because biotech's been very weak. Maybe that's something to pay attention to. Telecommunication, home construction, and the cloud. Over here are 3 different indexes. The S&P 1500, which is a great index because it includes the 500 large cap, 400 mid cap, 600 small caps. The NYSE, which is a funny index with a lot of weird things, but has a lot of energy and banks. And then the NASDAQ, which is tech-related. So they're all different. The first question is, what percentage of the sectors were up? All up in the S&P 1500, all up in the NYSE, all but one of the NASDAQ sectors were higher. What about industry groups? 89% in the S&P 1500, 86% in the NYSE, 83% in the NASDAQ. That's very bullish. What about stocks? 84% in the S&P 1500, 74% in the NYSE, and 69% in the NASDAQ. A very bullish day where the majority of stocks, industry groups, and sectors were higher. You know that from your portfolios. Buckets, something I've been using for 20 years, predominantly on the S&P 1500, and recognizing that you can put 10% slices between the bottom and the top of the Bollinger Bands, add number 11 for what's above, and 0 for below. So what we're going to load here are the buckets in 3 different time frames for the major ETFs, the NYSE, the NASDAQ, the S&P 1500, and the Russell 1000. Now, to create these, the program is going through every stock in these ETFs or indexes and getting their percent B. And this is 0 to 10, 11 to 20, 21 to 30, and so on and so forth. The 0 are the stocks below, and the 11 are the stocks above. The thick gray represents last week, and you could see we had 18% of stocks in the NASDAQ were below the bands, 16% in the Russell 1000, 11% in the S&P 1500, and 12% in the NYSE. I would have said we're getting stretched to the downside. We're not at a guaranteed reversal there, but it turned out to be a reversal, and we've shifted to the right. Now we look at stocks above, and there's hardly any stocks above, so we're not getting a signal. The thick line is a week ago. The next lighter gray line is 1 day ago. And you can see we're starting to build up above and at the high end, but we're not extended by any means. The breadth view is when I look at the NYSE and the NASDAQ, and I have a whole bunch of indicators in here. I've got, as you can see here, the 50 MA and the 200 MA, NYSE on the left, NASDAQ on the right, and I look at these signals on a daily chart. Here, I'm looking at stocks in green above the 20-day moving average, and white above the 50 and red above the 200. When we get up here, you know you're extended. When you're down here, you know that the market is weak. We're heading towards the top, but we're not there. A little bit weaker, perhaps, on the NASDAQ. No surprise, the NASDAQ's been a laggard. I can look at new high, new lows. I can look at advanced decliners, and I can look at up-down volume, and you can see a bullish pattern here in the NYSE and on the NASDAQ. Now, there's a bunch of indicators in this lower pane, and those that have followed Ian Woodward or followed me over the years have heard of most of these. These red triangles down are Hindenburg Omens. I refer you to the YouTube video that I just posted, especially in the at about the 20-minute mark. I go into of why these matter. But we've got confirmed Hindenburg Omens on the NASDAQ and on the NYSE. And just in short, there's never been a major top that was not preceded by these, nor a major correction. And we go back to the Great Depression for that. And I'm not talking about 2007 and 8. When I see this pattern, I get nervous. This double top here on the NYSE with the Hindis kind of feels like 2007 and 8. We saw this in 21 going into 22. And I think you know what happened, at least in the beginning of 22. So something to pay attention to. The red tall line here is a phoenix. It's an exuberance to the downside. We don't have any of those now. The green one is a eureka, exuberance to the upside. The salmon-colored X's represent something called the bango, which is another irrational exuberance. You're buying everything. There is a bingo that's coming, which is selling off, but this has not been programmed yet. And then we've got a special bottom indicator that Praveen, my programmer, came up with when he was looking to find something that would be like the Hindenburg Omen. And it doesn't fire often. It's that green triangle. And when that green triangle fires, it's always been a major bottom in the market. So hopefully we don't have to see those for a long time because it means we have to have a big sell-off first. So we'll learn more about this. Actually, that is not the signal there. That is the I got to go back further to the left to get that signal because it's going to be closer to the bottom. There you go. Major bottom, major reversal, major bottom. These are daily. You had two bottom, the green bars, bottom. I think that Praveen going to nominate him for a Nobel Prize for picking market bottoms after major sell-offs because it's spot on. But right now, what I'm concerned about are the Hindenburg Omens. Now, I could also look at ratio charts to get a sense of what's working in the market, and that would be part of my top-down analysis if I wanted to get a sense of where the leadership was in the market. Here we have them. Bitcoin is not a ratio chart. It just shows you Bitcoin's on fire. You have 11 charts here that are the S&P sector and ratio chart versus the spider. I'm looking for what's up towards the top. Financials super, super strong. Industrials are strong. Discretionary is off the top, but it's been strong. Energy has picked up a lot. Things that have been weak, utilities have picked up, but they've been weak with staples and real estate. Healthcare has been the dog, although biotech turned up some this week. Gives me a sense of what's working. This is working real time in the market. So now I've done my job of my top-down review. I feel bullish this market with some concerns. Now let's go look at where we want to play. For that, we go into my layout view. And just to show you in my layout view, we have a list of various indexes that we track. The JAS list combines the NYSE, the NASDAQ, and the Amex, puts a 100,000 share filter on it and a $1, and it gives you 3,367 stocks. We have daily, weekly charts. When we release it, it'll have a full-fledged drawing tools and indicators. Right now, it just has mine showing. These include the high-low jump. Just look at the number. That gives you a sense of whether we're extended or not. Anything above 95 or below minus 95, we're extended. Next, we have the weekly bongo on top with the daily bongo. These are trending indicators. For moving averages, green is 17, white is 50, red is 200. We get regular volume bars. Then we get my dots. My dots are how I scan. And where do the dots come from? I've been trading since the 90s, and I know that every big move that I've ever participated in started with certain things. And so I have, from the bottom, you have a green candle low, which is a single candle reversal. Stock's been going down, lowest bar in the last 10, and then it closes up on the session, giving you an up candle, and that's why that bar is there. A red candle high, stock's been going higher, and then it opened up, set a nominal new high, and then closed lower on the session. So there, and that is a red candle. I guess this was the one right here that did it. That's a red candle high. It's a reversal to the downside. The yellow line represents the squeeze, the Bollinger Bands contracting within the Keltner channels. When you come out of a squeeze, you get 3 little dots. So you know that you have squeeze release. Then from the bottom, there'll be 4 dots. Let's see if we have any here. There's one. The first dot is momentum. The second dot is breakout. The third dot is a volume. And the fourth dot is a gap. All right. So I don't know any stocks that started a big bull run or bear run without some of those occurring. Then there's a little break. And the next thing you see is the CPR. The CPR is a moving average crossover system, not based on just price. That's a buy-sell indicator. And then you have the green dots, which is a buy, the red line a sell, for another trading system that I use. So down here you have OBV versus its moving average. I want it to be green, which means price, the values above the moving average. Down here you have relative strength versus the spider. Are you above or below the moving average? Green, you're above. And I look at how big the number is. This tells me they both crossed on Friday. Over here, I have the radar screen, which updates real time as long as this is checked during the day, and includes symbols, last change percentage, how many up dots, how many down dots, what is the age and color of the bongo. Here, 1 day bullish, you get a green 1. On the weekly, let's look at A real quick. So I'm apples and apples. A, you can see here, you have a bunch of red ones. So it's 6 weeks that you've been red. 3 different momentum timeframes, short, intermediate, and long, where I might rank things to see what's working right now or what's been working. So snow comes to the top on short-term momentum, and you could see what happened over the last couple of bars. Then I have relative volume, what has a lot of volume. Now during the day, that's very useful. And then just like I have down here, OBV, a 21 on snow tells me it has been above, and I guess I have to update this, but 22 bars since it went above. And then the relative strength versus the spiders. If it's green, it's above. If it's red, it's below. Now, what I can do, and I'm going to turn it off and on to make sure I'm updated to the current bars. Okay, there you go. Now there's a match between what's over here and what's in the radar screen. I just had to do a quick refresh. All right, so I could rank stocks from a top-down perspective. Here I've looked for stocks with short-term momentum. The next one's MDB. Nice breaking out here. I actually like this a lot. Big volume, look at all those dots. And both my other trading systems went long on Thursday or Friday. Restoration Hardware, is it back? It's back. Here's a big gap up, pullback, and a breakout. I might wonder about earnings, so I can show some fundamentals. We're building out more. Next earnings are due December 5th, and you can see it's looking for some growth there. That's a lot of growth on the earnings, not much on the revenue. Mercado Libre is another one that had a big move, pullback, hasn't yet taken out its 50. So one way to do that, Datadog software is strong right now, and you can see a big move. Now, the problem with doing bottoms up and looking at what's best in the market, a lot of these things have had big moves. One that I like is ANF. Big uptrend, pullback, running up to 200, and look at this breakout. So a couple things happen when you've been going sideways. You're not extended. Awesome. Here's the EMS trading system is positive. The CPR is positive. You lit up all the dots and you had a PSAR reversal, which is the red and blues, and you're coming out of a squeeze. What's not to like there? Well, there's one thing not to like. If I show fundamentals, earnings are Tuesday. That's the only problem with ANF. So one way I can look at the markets is to go down. Gap is one that I'm long, which had a big breakout on earnings. Why was I long? I just liked its earnings seasonality. Turned out to be okay. So top down, I could do that. Another thing I could do top down is I could go into the filters and let's get price greater than 5, volume greater than 500, and we want 2 days momentum or positive. I've learned over the years this is a very strong signal. Almost every one of these stocks are stocks that I'm looking at. We looked at Abercrombie & Fitch, Dick's Sporting Goods, and I'm going to show you where you see this signal. It just broke out above the 50 and the 200 after some loosey moments. Does it go back up to 240? Look at all the blue and the green down here, volume coming in. This is green. How do I know you had this signal? Notice the 2 blue dots in a row here. 2 days of big positive momentum. We saw the gap. Ross Stores, I don't like where it closed down here, but heck, if it traded there and stayed there, I'd be pretty excited. So that's what I'll be watching. Look at the massive volume, the right colors coming out of the squeeze. And remember, when I say right colors, I'm not being an imbecile. I'm talking about breakouts, momentum, volume, gaps, and the 2 trading signals are all positive. I'll teach you all those when I do some of my webinars. I wanted to show you here, I think Ross Stores had earnings, and you can see it came out the 21st with a positive earnings surprise. XHB, I think that's home builders, right? Home builders looked interesting. Pulte and Toll. All right, so XHB looks like it's ready to break out. What about Toll Brothers? Let's go up in here, type TOL, Toll Brothers. Broken out, looks pretty interesting. Starbucks. And then XOP would be consumer staples. If you wanted to buy this, it just broke out above the 50. So another one of my favorite bottoms up scans, because I'm not looking at industry group, I'm just looking for patterns here. Turn off K-Force. Let's look at a multi-time frame buy on that CPR signal. This is requiring Friday to have a buy on the CPR. So let's look at, which one do I want to look at? Look at Ford. So it required Friday to trigger the CPR. And it also means that on the weekly, it's in an uptrend too. So it had a CPR trigger there. So I've built scans to find certain patterns. So MDB is one that I like. Took out the 50 and the 200. That's one that made my list. There's a CPR there. And that's a weekly, so I better look here and better look better on the daily. And there's a daily CPR breaking out above the 200. Here is Toll Brothers. I like the chart, CPR there, and trust me, it's going to have a blue one somewhere on the weekly and not a red one. There you go. So that's another scan. Another scan I built, and I say I mean Praveen. He listens to me and he makes things to do what I want, which is amazing. Boy, could I say something that would be sexist, and I'm not. And then I have some stocks that have had a weekly bullish turnaround, and I might be looking at, and you look at SMCI, for example, this is one that's been going down, 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 down. And if I look at the weekly, I'm going to see a reversal. Here's a big reversal on the weekly. And I might want to look at some of these. WMB is a master limited partnership. I guess a down and then a reversal up. And we can look at the daily. This has just been a huge leader. So different scans that I built to find. Right now I'm bullish, not bearish. So I've looked at the bullish scans. Now let me kill all those. And you're going to see we got 33. Oh, make sure I kill it. Oh, it's went to weekly. Let's go back to JAS. 3,367. Now let's go to top down. You could see that we built everything into 11 sectors and 144 industry groups. By percentage change, the strongest on Friday was cyclical, followed by financials and technology. I like using my short-term momentum. And by short-term momentum, the strongest was cyclical, industrials, technology, financial services. All right. I can look at ranking my 144 industries by short-term momentum. What comes up to the top is industrial distribution. Now, I could click on that, and you'll see what comes to the top is an industry group of 11 stocks, and every one of them was up. If I rank by short-term momentum, the leader was GWW, Granger, pullback and a breakout. AIT, Applied Industrial Technologies, pullback, breakout, expensive stock. WSO, Watsco. Now, these are big stocks, expensive stocks. We could click the top 5 of these, 3, 4, 5, and see what comes up to the top when I do that. And now we've looked at the top industry groups, and these are the top stocks in them, and several of the things we've looked at came up. Well, John Deere we haven't looked at yet, and John Deere is sitting at a nice breakout here. It's probably getting extended. It says 100. Burlington we looked at. This is one that didn't finish well. Actually, Burlington looked very good. It was Ross Stores that did not, and this is probably on earnings. If I click this, it'll bring me back to the last candle. And if I look at the fundamentals, it shows earnings are coming out the 26th. Okay, so it must have been in sympathy with Burlington, with Ross Stores, perhaps. Abercrombie and Fitch, I mentioned already, but now I'm looking at it from a top-down perspective. Granger, we already looked at. RBC, who's our RBC Bearings, an industrial stock. So here I'm now ranking them by short-term momentum. Now, there's many things I could do. The next thing I could do is unhighlight these. So I'm back to where I was with all the industrials, no stocks. And let's say I'm interested in energy. If I click on energy, what we're going to see is all of the energy industry show up, as well as the 205 stocks in the group. What comes to the top is Landbridge, don't know who they are. Vista, VIST Energy, looked really interesting to me on my evaluation. It's getting extended though. YPF, boy, we call this one a while back when it broke out. Notice here you had these 2 days with all the dots, took out the 17 here, and it hasn't really looked back. What looked interesting to me over the weekend were a lot of the MLPs. So let's just hit the midstream, all built in for you. Rank them by momentum. DT midstream comes to the top. Now the problem is, how do you buy these things? They're so extended. They all pay big dividends. Viper Energy Partners, One OK Inc., Multiplex. Now I'll tell you how you buy them is you do this every day. You look at the markets the same way and you find it on this date here. And if you look below, you're going to see on this date, I'll get it eventually, folks. If you look below, you see a big volume day, the CPR fired, volume breakout momentum out of a squeeze, and this was a buying opportunity. It's run up 10% in just a couple days. So I just wanted to show you some of the tools that I'm building and how it will simplify my life, because if you've been a fan of my weekend reviews, I just put everything into one single platform with a great workflow, more to follow. Have an awesome weekend.